Until Biden finally stepped down over the weekend, the news flow had been going decisively in favour of Donald Trump. Kamala Harris, now a near certainty to become the Democrats' candidate, should see a bump in the polls. Nonetheless, the financial markets still see Trump as the likely victor in the November election. They also see a good chance of a clean sweep, with Republicans taking back control of the Senate and holding on to the House. And that would remove many obstacles to their policies, notably on the budget. So what will all this mean for financial markets? Well, there is a general consensus that a Trump presidency would see corporate tax cuts, deregulation, a reversal of the climate change agenda, and higher tariffs. The Republicans have also promised a wholesale clear-out of mid- and senior-level officials in the federal government, and its agencies, in response to what they see as the deep state, something that resists their policies. Although higher tariffs would generate fiscal revenue to offset some of the impact of the tax cuts, they'd also put up prices, and this could also boost bond yields. But tax cuts are good for the equity market, and widespread tariffs would benefit smaller US companies in particular, who tend to be more domestically orientated. A more aggressive policy towards foreign relations, notably with respect to China, that could be bad news for emerging markets. Finally, both Trump and his vice president are opposed to more money for Ukraine and less supportive of NATO. So Europe would have to meet more of its own defence bill. The impact on the dollar? Well, that's unclear. A risk-on rally that would tend to weaken the dollar, but higher tariffs and concerns over emerging markets, well, that works the other way. More generally, we should not ignore the fundamental backdrop. The developed world outside the US, that's beginning economic recovery. Interest rates are headed lower. The US economy seems to have slowed, which is good news, and we've also had better US inflation data, so that's all positive. There's still a long way to go before the presidential election. Much can change, but both the fundamental backdrop and the prospect of Trump 2.0, well, it would seem to favour equities with a rather broader benefit beyond the Magnificent Seven. Elections so far in 2024 have had major impacts on financial markets in India, South Africa and Mexico, just to name just a few. We shall have to wait until November to see just how big the impact of the biggest election of all from a financial market perspective will be. Until next week, goodbye from me.